Yonathan Lapchik, CEO of SUKU and blockchain specialist, joins us now. Yonathan, great to have you with us in what has become a big week in the crypto space. I want to kick off talking about Tesla's U-turn on Bitcoin, because you've made the argument that Elon Musk failed to incorporate the reality that 75% of Bitcoin mining comes from renewable energy into his statement. But that figure is pretty contentious. What is the percent of Bitcoin mining that actually uses 100% renewable energy sources?
Yeah, so thank you for having me. And that's a good question. We think that 75% is an actual figure. The miners are truly incentivized to use renewable energy. And it's surprising that Elon didn't consider that before getting into the space, before accepting Bitcoin as a payment mechanism for Tesla. So really, the data has been there forever. We've been proving over and over and over that that's a real case for miners in the Bitcoin network.
And in the statement, Tesla also made clear that they will be looking at other cryptocurrencies. This is not a blanket view on cryptocurrencies. They'll be looking at others that are potentially more fuel efficient or less reliant on fossil fuels. Are there cryptocurrencies that are either more energy efficient or at this stage rely almost exclusively on renewable energy sources?
Yeah, so any proof of work blockchain such as Bitcoin, which includes also Ethereum, used incredible amounts of energy to reach consensus on the state of the chain. Ethereum uses about as much as electricity as the entire country of Libya. One artist actually analyzed 18,000 NFTs and found that the average NFT had a carbon footprint equivalent to more than a month worth of electricity for a person living in the EU. Fortunately, yes, there are alternatives. Hedera Hashgraph, as an example, which is the protocol that we use at SUKU, is a distributed ledger-based network that is dramatically more energy efficient with a much lower impact on the planet because it does not deploy proof-of-work consensus. So yes, there are alternatives, and he seems to be exploring those alternatives right now.
So you mentioned one of the alternatives now, Hedera Hashgraph, and clearly there's a whole universe of cryptocurrencies out there. What is the investment thesis for buying into that cryptocurrency, apart from the fact that it's sourced from renewable energy? In the case of Bitcoin, many people out there believe it to be a store of value. In the case of Ethereum, it's been used as a blockchain that serves as an infrastructure for other systems. And I just wonder, with the huge universe of cryptocurrencies out there, for an investor who isn't so discerning, how do you make an investment case for each one of them? There's so many of them.
So there are different layers, right? We see the protocol layer where we find Bitcoin, when we find Ethereum, when we find Hedera Hashgraph. And then we have, on top of that layer, we have different cryptocurrencies that will give different utilities for different applications. And the idea is that these different tokens would interact with each other and create value for the network to give access to different applications, to give access to different resources into the network. So really depends on where you focus on. And we see this as an entire new form of internet where decentralized assets will be connected to each other. So really the investment focus should be depending on what you are building. Is it an app? Is it on the protocol layer? And in which stage of the development are you in?
So I've never actually spoken to anyone who is invested in cryptocurrencies or has a vested interest in blockchain who has one element of doubt about the future. I'm going to put the question to you. What do you think is the biggest risk right now to the cryptocurrency space?
So in the cryptocurrency space, I see two main issues. The first one is around regulation, which it's part of the equation, and it's important to go through it. Many different countries and many different companies are learning still from it. So it's important to keep educating the different participants in the space. And the second one really is on adoption. We've seen, for example, eBay announcing this week that they were launching NFTs. So that's great news for mainstream adoption. That's one of the risks, and it's part of the learning curve and the adoption curve. But there are many different signals in the market that really give us the certainty that the blockchain and the crypto space is here to stay.
Many critics out there will say that the price action that we've seen in cryptocurrencies is just a reflection of what's been happening in areas of the market itself. We see many stocks out there trading with extreme valuations. You're seeing money pouring into esoteric parts of the market anywhere that is yielding some form of a return. People are buying assets with the hope that somebody else will buy it off them at a higher price. But there's the fear that if we ever do enter into a bear market for stock markets, then cryptocurrencies are going to be one of the first asset classes to suffer. What do you say to that?
I would say yes, and we've seen that over March last year with the coronavirus, where we've seen the direct correlation between the legacy, what we call legacy systems in the crypto space, and the crypto space being entirely correlated. So definitely, when we see a risk off, cryptocurrencies are going to be part of the equation, and we've seen that correlation for a long time. Hopefully, at one point, cryptocurrencies serve as a way to diversify the current assets, and hopefully we can see that the correlation being away over and over.
Very clear. Yonathan, we're going to leave it there. Thanks so much for waking up so early or staying up so late. I see you're in Miami to join us on the show. Yonathan Lapchik, the CEO of SUKU and blockchain specialist. Well, also coming up on Street Signs, the conflict in Gaza intensifies.